The motorcycle industry is collapsing faster than anyone expected. Thousands of unsold bikes are piling up in dealerships. Prices are plummeting. Financing is getting harder to secure, and manufacturers are cutting production at an alarming rate. So what went wrong? Why are some brands on the brink of failure while others are thriving? And most importantly, what does this mean for you in the industry? Let's dive in. What's happening? The motorcycle industry is facing a collapse unlike anything we have seen in decades. What was once a thriving industry filled with passionate riders is now crumbling under the weight of unsold inventory, unaffordable financing, and manufacturers who overestimated demand while ignoring warning signs. At the heart of the crisis is a perfect storm of high prices, rising interest rates, and declining demand. Over the last 5 years, motorcycle prices have skyrocketed. A bike that might have cost $15,000 in 2019 is now pushing $22,000 or more, thanks to inflation, supply chain disruptions, and manufacturers continuously pushing premium pricing strategies. Brands like Harley Davidson, Indian, and even Honda have all priced their flagship models out of reach for the average buyer. Then there is the financing nightmare. In past years, financing a motorcycle was relatively affordable, with interest rates as low as 3% to 5%. But today, motorcycle loan rates have tripled, reaching 9%, 10%, or even higher. For those with less than perfect credit, the rates can be as high as 15% to 18%, making financing a new motorcycle an expensive trap rather than an option. The biggest issue: demand is shrinking. With high prices and rising interest rates, more riders are holding onto their bikes longer, refusing to take on new loans or pay inflated prices for motorcycles that offer little improvement over previous models. Even younger riders who traditionally fueled the entry-level segment are turning away from motorcycles altogether, opting for alternative transportation or waiting for prices to drop. This crash is shaping up to be worse than 2008, when financial instability forced riders to delay purchases. Back then, motorcycle prices were still relatively low, and interest rates were manageable. Now even seasoned riders with stable incomes are choosing to wait, knowing that the industry is sitting on a ticking time bomb of unsold inventory and inevitable price reductions. But the worst part: dealerships are drowning in unsold inventory. Dealerships in crisis. Across the country, dealerships are in a state of panic. Many showroom floors are packed with unsold motorcycles, some sitting there for over 200 days or more, collecting dust as buyers continue to walk away. The sight of rows of brand new Harley Davidsons, Yamahas, and BMWs that no one is buying is a warning sign that the industry is in deep trouble. One of the biggest problems facing dealerships right now is high flooring costs. Dealerships do not own the bikes on their showroom floors outright. Instead, they finance them through floor plan loans, which means they pay interest on unsold inventory every single month. The longer a bike sits unsold, the more money the dealership loses. With record-breaking unsold inventory, many dealerships are drowning in debt, unable to move bikes fast enough to cover their costs. To combat this, dealerships are slashing prices and offering aggressive promotions. Some brands, including Harley Davidson and Yamaha, have cut up to $5,000 off MSRP, while others are offering 0% financing for up to 36 months just to move inventory. But even these discounts are not working. Buyers still are not biting, knowing that prices are likely to drop even further as dealerships get more desperate. Smaller dealerships, the backbone of the industry for decades, are quietly shutting down. Unlike large corporate-owned chains, independent dealerships rely on consistent sales to stay afloat. But with sales drying up and overhead costs rising, many are being forced to liquidate inventory and close their doors for good. For dealerships that do survive, the pressure is mounting. Many are hesitant to take in trade-ins because the used market is also crashing, meaning they are stuck with bikes that are worth far less than they were a year ago. This further limits their ability to make deals with customers, creating a vicious cycle that is making the crash even worse. And it is not just dealers. Manufacturers are scaling back too. The supply chain disaster. With dealerships failing to move inventory, motorcycle manufacturers are being forced to take drastic action, Brands that once dominated the market, including Harley Davidson, Honda, and BMW, are cutting production, laying off workers, and freezing research and development budgets. Harley Davidson, for example, announced a 25% cut in production, scaling back factory operations to match lower demand. Indian Motorcycles is following a similar strategy, hoping that restricting supply will prevent prices from crashing even further. But these cuts come at a heavy cost, leading to factory shutdowns, job losses, and an overall decline in industry stability. Even major Japanese manufacturers like Honda, Yamaha, and Suzuki are feeling the pressure. Honda has already laid off workers in some of its overseas production plants, and BMW Motorrad has reduced its output by 25% compared to previous years. But global supply chain crisis has only made matters worse. Rising costs of raw materials, international tariffs, and increased shipping expenses have pushed motorcycle prices to record highs, making them even less appealing to consumers. Manufacturers tried to justify these price hikes, believing that demand would stay strong. But now they are stuck with expensive bikes that no one wants to buy. And as budgets tighten, R&D spending is being slashed, meaning fewer new models, fewer innovations, and a slowing of technological advancement in the industry. This will have long-term consequences, as brands that fail to innovate risk losing even more customers. But even if you want a bike, financing one is becoming impossible. The interest rate nightmare. Motorcycle loan interest rates have tripled since 2019, with many banks now charging 9% or more on new motorcycle loans. For used motorcycles, the rates are even higher, often reaching 11% to 15%. This means that a buyer looking at a $30,000 Harley Davidson Road Glide could end up paying over $40,000 by the time the loan is paid off. And if you have less than perfect credit, forget about it. Loan approvals are at a record low, with banks rejecting 1 in 5 motorcycle loan applications. Lenders are more cautious than ever, fearing that borrowers will default as economic conditions worsen. Insurance costs have also spiked, adding yet another financial burden to motorcycle ownership. Motorcycle insurance premiums have doubled in some states, making it even harder for riders to justify a purchase. When you combine high interest rates, expensive insurance, and skyrocketing bike prices, it is no surprise that many potential buyers are walking away altogether. And that is leading to a record-breaking wave of repossessions. Repossessions are surging. The motorcycle repossession crisis is unfolding at an alarming rate. Over the past year, repos have surged by 28%, marking the largest spike since the 2008 financial crisis. Riders across the country are walking away from their bikes, unable to keep up with soaring loan payments, increasing insurance costs, and a worsening economic climate. For many motorcycle buyers, what seemed like an exciting purchase has turned into a financial burden. The combination of inflated motorcycle prices, skyrocketing loan interest rates, and rising living expenses has made it impossible for some to keep up with monthly payments. As a result, lenders are seizing motorcycles at an unprecedented pace, often faster than dealerships can resell them. This rapid repossession cycle is creating a vicious loop that is dragging the entire motorcycle market down. As more repossessed bikes flood the market, resale values plummet, leaving current owners stuck with loans that exceed the value of their motorcycles. The result: fewer trade-ins, fewer new bike sales, and an industry struggling to stay afloat. And that's why used bike prices are crashing at a historic rate. Used motorcycle prices are plummeting. With thousands of repossessed motorcycles hitting the used market, prices are falling fast. Trade-in values have dropped by 35%, leaving many owners with loans that far exceed their motorcycle's resale price. This means that even those who want to trade in their bikes for something new can't do so without taking a massive financial hit. The problem is compounded by the massive oversupply of used bikes sitting at dealerships. Traditionally, trade-ins play a crucial role in sustaining motorcycle sales, allowing buyers to put equity toward a new purchase. But with so many repossessed motorcycles flooding the market, dealerships are reluctant to accept trade-ins because they already have too many used bikes sitting unsold. This oversupply is killing demand for new models. Potential buyers who might have considered purchasing a brand new motorcycle are now turning to the used market instead, where they can get a nearly new bike for thousands less. As a result, dealerships are finding it nearly impossible to move new inventory, leading to even more aggressive price cuts and desperate financing offers. Yet, despite used prices crashing, new motorcycles remain overpriced, keeping many buyers on the sidelines. But while used prices are plummeting, new motorcycle prices are still shockingly high. The price bubble has burst. The motorcycle price bubble that manufacturers inflated over the past 5 years has officially burst. Since 2020, the cost of new motorcycles has skyrocketed by over 40%, making it increasingly difficult for the average buyer to afford one. Harley Davidson and Indian motorcycles have led the pricing disaster, with many of their flagship models exceeding $30,000. A Harley Davidson Street Glide that cost around $22,000 in 2019 now costs closer to $35,000. Even entry-level models like the Harley Nightster and Indian Scout, once accessible options for new riders, have become nearly $15,000 or more. Manufacturers misread consumer demand, assuming that riders would continue paying inflated prices indefinitely. However, with rising interest rates, economic uncertainty, and competition from the used market, many potential buyers have decided to wait it out, leaving dealerships stuck with unsold inventory. The result? Massive production slowdowns, factory layoffs, and desperate price cuts. But for many manufacturers, it's already too late. They overproduced, overcharged, and now can't sell their own bikes. And this pricing disaster is hitting electric motorcycles even harder. The electric motorcycle fantasy is over. For years, manufacturers have pushed electric motorcycles as the future of the industry. Yet, despite all the hype, sales numbers tell a different story. Electric motorcycle brands like Zero, Harley Davidson's Livewire, and Energica are sitting on massive amounts of unsold inventory, struggling to find buyers willing to make the switch. The biggest issue? Price. Electric motorcycles remain far too expensive for the average rider. A Livewire 1 costs over $22,000, nearly the same price as a fully loaded gas-powered touring bike. Meanwhile, Zero's premium models hover around $20,000, making them unattainable for most buyers. But cost isn't the only issue. Range anxiety continues to plague electric motorcycles. Unlike gas-powered bikes, which can be refueled in minutes, electric motorcycles still suffer from limited range and long charging times. Riders who enjoy long-distance cruising find electric bikes impractical, especially with the lack of a widespread charging infrastructure. Even with government incentives and tax credits, electric motorcycles aren't selling at the levels manufacturers hoped for. Many buyers remain skeptical about battery longevity, expensive replacement cost, and uncertain resale value. As a result, dealerships are now overloaded with unsold electric motorcycles, forcing manufacturers to slash production and reconsider their long-term strategies. The electric motorcycle dream is collapsing, leaving brands like Zero and Livewire in a vulnerable position. Without dramatic price cuts, better technology, and improved charging networks, EV motorcycles may remain a niche market rather than the industry-changing revolution many predicted. But the biggest red flag for the motorcycle industry? The specific models that dealers just can't sell. The 8 worst-selling motorcycles of 2025. The motorcycle market crash of 2025 has left many models gathering dust in showrooms, and data shows that certain bikes are simply not selling. Whether due to overpriced tags, underwhelming performance, or failed marketing strategies, even some of the most recognized brands are struggling to move inventory. One of the biggest disappointments is the Harley Davidson Livewire, the company's ambitious attempt at an electric motorcycle. With a price tag exceeding $22,000, limited range, and long recharge times, the Livewire has failed to connect with Harley's traditional audience, while also failing to attract younger riders looking for affordability and practicality. Dealerships are reporting that these models have market-day supplies exceeding 280 days, meaning that at current sales rates it would take almost a full year to clear out existing stock. Another major flop is the Indian Challenger Dark Horse, a premium cruiser priced at nearly $28,000. Despite its aggressive styling and modern tech, it is struggling to compete with Harley Davidson's Road Glide Special, which offers similar features at a comparable price. Riders are either looking for more budget-friendly alternatives or opting for used models instead of committing to the massive price tag of a new cruiser. Sport bikes are also taking a hit. The Kawasaki Ninja H2 SXSE, a $27,500 supercharged powerhouse, is proving too niche and expensive for the average sport bike enthusiast. While it boasts cutting-edge technology, the high insurance costs and complex maintenance requirements make it a tough sell compared to more practical sport touring options like the BMW S1000XR. Similarly, the Suzuki GSX-R 1000R, once a fan favorite, has become outdated, struggling to keep up with more refined and modern rivals. Electric motorcycles are suffering across the board, and BMW CE04 electric scooter is no exception. While it presents a futuristic design and an urban mobility focus, its $12,000 price tag, limited range, and long charging times have left buyers uninterested. Even in major metropolitan areas where electric vehicles are more popular, the CE04 is failing to gain traction. Another premium sport bike struggling to sell is the Ducati Panigale 5.2. While Ducati has a reputation for high-performance machines, the $17,795 price, combined with costly maintenance and expensive insurance rates, have left many potential buyers looking elsewhere. Even touring motorcycles are feeling the effects of the market downturn. The Honda Goldwing Tour, once the king of long-distance travel, is now sitting unsold in dealerships for an average of 250 days. Its $28,600 price, combined with changing consumer preferences and high fuel costs, have made it a tough sell. Finally, the Triumph Rocket 3 GT, despite boasting the largest production motorcycle engine in the world, is struggling. Its $24,000 price tag and massive size make it intimidating for most riders, limiting its appeal to a niche market. With over 325 days of unsold inventory, it is clear that Triumph overestimated demand for this ultra-powerful cruiser. But while premium motorcycles are struggling, entry-level bikes, historically a gateway for new riders, are also facing serious challenges. When will the market recover? The harsh truth. The motorcycle market crash of 2025 is far from over, and industry analysts warn that recovery could take years. One major factor that could delay a rebound is the lingering impact of high interest rates. As long as borrowing remains expensive, buyers will continue to hold off on purchasing new motorcycles, keeping demand low. If inflation remains high, motorcycle financing may not become affordable again until 2026 or later. Manufacturers are likely to respond with desperate strategies to survive. Many brands are expected to offer aggressive discounts, cut production, and even discontinue struggling models in an effort to clear out inventory. Some smaller brands may go out of business entirely, leading to a more consolidated market with fewer choices for riders. Dealerships, which are already struggling with high inventory costs, may be forced to shut down or switch to selling primarily used motorcycles. The wave of repossessed bikes flooding the market is further complicating things as it drives down the value of both new and used motorcycles, making it even harder for dealers to turn a profit. But to fully understand where the market is heading, we need to look at past motorcycle industry crashes and what history tells us about recovery. Lessons from past market collapses. What history tells us. The motorcycle industry has weathered economic downturns before, but the 2025 market crash is proving to be far more severe than previous collapses. Looking at past recessions, particularly the 2008 financial crisis, gives us valuable insights into how the industry responded under pressure and what might happen next. During the 2008 recession, motorcycle sales plummeted as disposable income disappeared. Harley Davidson, Yamaha, and Honda all experienced sharp declines in demand, with Harley alone reporting a 30% drop in U.S. sales. This forced major manufacturers to cut production, lay off workers, and, in Harley's case, even consider selling off its European MV Agusta brand to stay afloat. Dealership closures followed as smaller retailers couldn't sustain the financial strain of holding on to unsold inventory. However, the brands that survived did so by quickly adjusting their business models. Honda, for instance, pivoted towards smaller, more affordable motorcycles, releasing models like the CBR-250R that appealed to budget-conscious buyers looking for an alternative to expensive cars. Kawasaki took a similar approach with the Ninja 300, which became a bestseller by offering a balance of affordability and fun. History shows that the brands that failed to adapt were the ones that collapsed. Victory Motorcycles, despite showing promise, couldn't maintain its market position after Polaris shifted its focus to Indian motorcycles. Meanwhile, smaller brands like Buell disappeared altogether due to restructuring and a lack of demand. If past collapses taught us anything, it's that brands must either adapt or fade into irrelevance. Those who find ways to reduce cost, offer better financing, and make their bikes more accessible will be the ones to survive. Those who continue to rely on outdated strategies and inflated pricing risk becoming the next Victory Motorcycles. But while some brands are struggling to stay afloat, the bigger question is, what does the future of motorcycling look like? The future of motorcycling. The motorcycle industry is at a crossroads, with the 2025 market crash exposing deep flaws in the way manufacturers operate. The industry must decide whether it will evolve to meet the demands of a new generation or continue to decline. Electric motorcycles were once hailed as the future of the industry, but their adoption has been far slower than expected. Brands like Zero Motorcycles and Livewire have struggled with high prices, limited range, and a lack of charging infrastructure. Riders are hesitant to switch from gas-powered bikes, and unless battery technology improves drastically, electric motorcycles will remain a niche product rather than a mainstream alternative. At the same time, advancements in self-driving technology and urban mobility solutions are changing the way people think about transportation. With autonomous vehicles becoming more common, some experts believe that motorcycles could become less relevant as a primary mode of transportation. Younger generations are already opting for ride-share services, public transit, and electric bicycles over motorcycles, which could further reduce demand in the coming years. Despite these challenges, there is still hope for the motorcycle industry. The continued success of retro-styled bikes and small displacement models suggests that people still love motorcycles. They just want them to be affordable and practical. Brands like Royal Enfield and Honda prove that younger riders are still interested in motorcycles, but they are not willing to pay luxury prices for them. The industry's future depends on whether manufacturers can adapt to these changes. If they continue pricing themselves out of reach and pushing technology riders don't want, sales will keep declining. However, if they focus on affordability, accessibility, and maintaining a strong brand identity, they can still revive interest and bring a new generation of riders into the sport. But for buyers right now, the real question is, should you buy, sell, or wait? Before we dive into the next chapter, make sure to like and subscribe if you liked this video so far. The final verdict. With the market in freefall, many riders are wondering whether now is the right time to buy a new motorcycle, sell their current one, or wait for prices to drop further. The answer depends on your financial situation and how the market evolves over the next year. If you're looking to buy, now might be the perfect time to take advantage of the crash. Many dealerships are offering record-breaking discounts, low financing rates, and major incentives just to move inventory. If you can hold off for another 6 to 12 months, prices may drop even further, potentially saving you thousands of dollars. If you're looking to sell, do it as soon as possible. The used motorcycle market is flooded, and as repossessions rise, trade-in values are going to plummet. If you wait too long, your motorcycle could be worth far less than it is today. If you're unsure, waiting may be the smartest move. With dealerships drowning in unsold bikes and manufacturers cutting production, the market is still in freefall. If you wait for the dust to settle, you might be able to secure the best deal of your life. The 2025 motorcycle market crash is far from over, but if you play it smart, you can come out ahead. What do you think? Is this the end of the motorcycle industry as we know it, or will brands find a way to survive? Drop a comment below and let us know your thoughts.